been kind of an interesting week. In terms of, and actually, going back into last week, I mean, if you are somebody who pays attention to the stock market, or somebody who's thinking about maybe retiring at some point in their life, or maybe somebody who, relies on, the broader market, in some meaningful way in their life, it's been an upsetting week for you. And frankly, even if you don't pay attention, it probably should be an upsetting week for you, because we had a 10% correction in the market. I have not had the nerve to look at the market yet today. We're recording this. I'm on Eastern time. It's 10:20 a.m. here, on Friday, March 14th. Turbulence, as a consequence of policy changes from one presidential administration to another. This is not unprecedented territory. In fact, this happens. The speed at which the Trump administration is moving, the number of levers that they're pulling. We do have some volatility. I guess it's to be expected, although I'm not sure that anybody was expecting it to be exactly like this. What are your thoughts on the marketplace as it is right now? I mean, what do you, as you kind of pull back, you are a level-headed fella. What do you see, and what are you thinking?
Well, look, I think I wrote about this. I think that, people have to get beyond the headlines, right? And, and get beyond the panic and start to look at the facts. And the bottom line is, the economy is still fine.
Yeah. I think that's the hard part for people to reconcile with at this point. And I agree with you. I think the economy is fine, but
potentially slowing.
Right.
And potentially slowing. It could slow because, partly, and let me start with the policy uncertainty, because the wait and see thing that's being caused by, kind of the speed at which you mentioned all those levers are being pulled. The constant stuff in the media, the headlines, the fear is causing businesses and consumers to pull back.
Right.
And to wait to see what happens next. And that in itself could actually cause economic growth to slow.
Could we talk about that? Could we zero in on that? And I have one other question. Recently, within the last week, we're talking about, what's going on, and the quote unquote real economy. When people are saying the real economy, are they speaking? I mean, I don't know. Maybe not everybody's using the terminology the same way. Do we mean reality? Do we mean beyond the headlines? Do we mean beyond the shocks of like looking at the Dow, lose 700 or 800 points in a day?
We're definitely not talking about the stock market.
Okay. What are you talking about?
We're talking about people building widgets and creating stuff.
Yeah.
And selling them in a goods market, or maybe people, providing services to consumers that they go out and buy, right? That's the real economy. It's the stuff that happens, the transactions that we see, on a daily basis taking place. That's the real economy.
So let's bring that back then into this conversation that we're having.
Consumers, when policy uncertainty increases, consumers pull back and say, hold on a second.
Yeah.
I don't know where prices are going to be tomorrow. I don't know what's going to happen next. Should I buy now? Should I wait? What should I do with my savings? Right. Consumers pull back. They say, hey, hold on a second. There's lots of mortgage rates are fluctuating a lot. Should I buy my house now or wait? Should I buy my new car or not? Right. And so consumers hold back. Right. Good friend of mine gave me this quote long time ago. When there's high uncertainty, consumers sit on their wallets.
Mm-hmm.
Businesses do the same thing.
Yes.
What do businesses do? They're like, hold on a second. I can't forecast where the economy is. I can't forecast whether or not people are going to be around to buy my stuff tomorrow. So what do? I need to hold back on hiring more workers, hold back on those new investments that the expansion plans we had. And so businesses also hold back. And so policy uncertainty has this stagflationary impact, right? Where basically you have less supply and then you also have less demand for stuff, right? You have less growth and potentially prices staying somewhat elevated or maybe even rising. Tariffs, right? Tariff policy. I don't know what to do with this. It's coming. It's not coming. It's going to be big. It's going to be small, right? And so this is impacting the real economy. Now, potentially, why do stock markets react? Well, am I going to go out and invest in a company if I think that potentially it's not going to grow into some valuation? It's not going to generate enough earnings, profits because consumers are going to pull back? Well, no, not really. Right. If I think that for 1 second that company that I really love might actually, see a major pullback in earnings next quarter, well, I might actually want to trim off some of those profits I made. I might want to sell some of the stock, right? And if a lot of people do this together on aggregate, what do you get? You get a market correction,
right? Like
the one we got.
Right. The
problem with those market corrections, right? Forward looking, is that at the same time, when people realize that the value of their assets is dropping like a stone, what do? They tighten the belt. At the same time, you got consumers, they're like, hold on a second, my stock is falling.
Right.
Maybe I'm not so safe anymore. So what do? I hold back on spending. And to some extent, that pull back on spending can actually lead to a bigger slowdown and an even bigger correction in the stock market, right? And so you see this doom loop that you enter, right? And then if growth slows to near zero, a small economic shock, something unpredictable comes in, and what do you have? You have growth falling into negative territory.
Right. And what you're talking about is the theoretical, and it's the fear of all fears, right? It's not aligned to what's necessarily happening.
No. I mean, it's not what's happening right now, but it could happen. And that's why investors tend to, fear hits the markets and people pull back. It could happen because people are, number one, people are in wait and see mode. Number two, people are afraid of what's coming next. They don't know how to prepare for what's coming next. Right. And so again, I said it before, where there's smoke, there could be fire.
All right. Right? But balance that off for me against the fact that inflation came in. I mean, that was what we were all waiting for this week. I don't know how many times you scared me with text messages about the CPI before the number came out. Like, hey, if this doesn't land the right way, we're going to be in trouble. It landed the right way.
Well, here's the thing. It's interesting because you have to be very careful.
Yes.
If price growth is easing too fast, could it mean that the consumer's pulling back faster than expected? It could. And that's a problem, right? That's especially for stock prices, right? Investors are going to feel like, oh, consumers are pulling back this week. Next week, we're going to get retail sales. It's going to be telling. It's going to be important to look at that, right? So we don't want consumers to pull back too drastically. It's not good for growth, right? At the same time, we hear tariffs could cause inflation to remain elevated, right? We don't want higher than expected inflation at a time where growth is slowing.
No.
Then you got stagflationary pressures. So the CPI really has to hit right to restore a little bit of confidence into financial market participants that we're still headed in the right direction, to restore a little confidence at the Fed that they're doing the right thing, right? And so, it's really, really important. Right now, consumer confidence is plunging.
Mm-hmm.
Business confidence is plunging. And so we're not getting the right type of signals, right now. Right. And so while the economy remains good for the time being, while unemployment rates remain pretty low, right? You got rising government sector and government employment cuts coming, right? Those are some cuts, and those cuts are going to show up to slow down the economy, believe it or not, That's how it works. At the same time, you got tax cuts being extended, which is a positive impulse, right, on the economy. That's good news. At the same time, you have housing starts declining, meaning that builders will not be hiring a ton, right? And you could even potentially see a decline in employment in the construction industry. And that's a negative impulse on growth, right? So there are all of these forces that are counteracting, that are basically trying to mitigate each other. And where we land is going to depend on which one of these forces is going to dominate, is going to be the largest, right? Is going to have the largest impact. And so that's why we follow everything. We don't look at just one data point. We have to make sure we keep track of everything that's going on in the real economy to make the most informed decisions for our wallets.